Checkout shares of Zillow plunging to a 16-month low today after the company officially said it was exiting its home flipping business. The news prompting our next guest to cut its price target on the stock.
Zillow, dubbed to be the Amazon of real estate. Zillow is an online real estate company founded in 2006. It generated a revenue of $2.7 billion in 2019. So, what is house flipping in real estate? So, Zillow, the company, buys properties at a lower price, renovates them, and sells them at a higher price. Zillow had about 43 million homes in their database in 2006, and they were able to predict the prices of properties at a 14% mean absolute error. By 2017, they had 110 million homes in their database. The error had reduced to 5%. So this gives rise to Zestimate. So Zillow trained a machine learning model called Zestimate based on features such as hospitals nearby, grocery stores nearby, schools nearby, to predict the price of the house in the area. So they used machine learning for that. So Zestimate is simply a machine learning algorithm to predict house price. So what went wrong with Zestimate? So for many reasons, the precision of their model started to degrade. This led to Zillow buying properties for a price much higher than its selling price. So in its third quarter, Zillow reported that they had lost $300 million from its flipping business. So welcome to the machine learning forensics. We are going to investigate what led to the degrading of Zillow's or the first factor that led to the degrading of Zestimate's precision, the data quality. So the primary factor for machine learning algorithms to perform well is good quality data. When the input to the machine learning algorithm is garbage, you can't expect it to perform well. Zillow has been relying on both shared datasets by the users and publicly available datasets. So there were possible data quality issues. For example, let's say Zillow is looking into buying a property ABC in Miami, then plans to invest some money into improvements and sell it in a few weeks for profit. Let's say Zestimate values the property at $500,000. If the model has a 10% error due to data quality issues, it means that the actual price should have been $450,000 US. Now Zillow has bought the property at $50,000 higher than the actual price. It will be very difficult for Zillow to make a profit on this property. So a simple error in the data, like the number of rooms in the property, distance from the nearest school, and other issues with key attributes could easily cause prediction errors. So the second factor into the degrading of Zestimate's precision is COVID-19. So COVID-19 might have taken a toll at Zillow's Zestimate machine learning algorithm. Here is how COVID-19 might have affected Zestimate. Many people lost their jobs due to COVID-19. Therefore, the demand for homes drastically dwindled, with Zestimate estimating properties at a higher price than they should have been, forced Zillow to sell them at a low price, thereby making less. Machine learning algorithms are trained on historical datasets so that they can predict the future. COVID-19 is something that has never been experienced before. That brought uncertainty in the real estate market, which affected Zestimate's performance. The other factor is selective focus. Zillow has been putting so much emphasis on the property and its price prediction. There hasn't been much focus on the buyer. In real estate, it should be important to understand buyer behavior. Without knowing the buyer, the demand cannot be accurately measured or accurately predicted. So Any data science problem should be analyzed from all possible angles. It should be studied in a holistic way. Also, it is not enough if you study before the model is put to use. The holistic data analysis should be continued even after the model is put to use. The other factor is gaming the system. When there is money involved, users will try by any possible means to try and cheat the system. It is clear that few houses in a suburb could drive property prices in the suburb up or down. For example, let's say an agent holds multiple properties in a suburb. At first, the agent would sell some properties at an artificially higher price to a non-internal contact. Then once the impact cascades to the other properties in the suburb, they sell other properties at a bigger margin. So these are the key factors that we have investigated in machine learning forensics that led to the degradation of the Zestimate's performance. The other factor also is heavily relying on the algorithms. So the real estate market is complicated as a whole. Therefore, only relying on machine learning algorithms when they are experts such as agents and brokers was a huge mistake on Zillow's side. So guys, what have you learned from the failure of Zestimate's performance, and what do you suggest? Let me know in the comments description below.